Good morning and welcome to the market forecast. Thursday, April the 8th. I'm John Hoagland. As always, thanks for trusting me with your time. Blessings to all of you. It was a big day yesterday here at Top Step. All of you that joined me for group coaching, hope you found it useful. We also had a big announcement yesterday with the soon to be released Coach T and a great question and answer session with Dan and Michael yesterday afternoon. I hope you enjoyed it. There was some conversation about hair, and I'm glad that mine did not get brought up. As always, hoping for you to find context in these markets, good risk management and patience. Follow your process. As far as economic numbers this morning, at 7:30, the jobless claims numbers came out, both the initial and continuing claims, both higher than expected. A little bit of a chill in some of our U.S. equities markets, although 3 out of the 4 are set to open higher. The S&P put up on another all-time high last night, 9:30 this morning in Central Time. Nat gas numbers due out at 11 o'clock. Chairman Powell is going to be speaking. That's going to be a large part of the focus after the open here this morning. So again, those markets kind of focusing and digesting those jobless claims numbers. Powell again speaking. Powell again speaking. That was hard to say. Again, speaking at 11 o'clock today, and lots of kind of rhetoric around there around some of the tax changes that may be coming down the pipe for us all. U.S. stocks kind of pushing higher, again, all-time highs in the S&Ps last night. After a couple of days of kind of consolidation in those markets, a bit of a chill, again, after the jobless claims numbers, but nothing too substantial. I'm not seeing any big knee-jerk reactions, so a little bit of digestion going on there. Gold prices push higher, testing resistance. Murph, we're going to probably have a chance to see if this weekly kickoff high in gold becomes magnetic or repellent. It's kind of hanging around there all morning long. We're going to take a look at that in the charts here soon. Even if you don't trade gold, it might be an opportunity to just watch and see how price revolves and either moves away from or becomes magnetic to that weekly kickoff number. Again, we're going to see that shortly. Crude prices remain range-bound after a kind of a bit of a surprise draw of 3.5 million barrels. But again, the market really range-bound, really centrally located inside that range. It's going to be an interesting day. We're calling for short time frame levels to be respected in crude oil, barring any new information. VIX down again this morning, down at 1689. Dollar index down. Dollar softening up a little bit now, down to 92.94 last time I looked. And the 10-year yield is really just kind of settled on this 1.65% level, just kind of hanging around there for a few days. So again, make sure you smash that like button, share, comment, question, feedback, and heckling are always welcome. And subscribe to our YouTube channel so you can get notifications when we do go live. Always like to say good morning to everybody. We have got Ralph, first one in the room. You win the prize again, Ralph. Brian D, Felix, good to see you. Murph, good morning. Hope you are all having a great week. Let's finish these last 2 days strong. Stay on the plan. Absolutely. Anytime I can stay on my plan, no matter the outcome, I consider that a successful day. Bill, good to see you. Joseph Anselmo, good morning. Richie, Ednelson, Will, Troy, Nick, Danny, Laura, Rob T, my brother Rick. How you doing, buddy? George, Jason, Jose, Ashton, Theo, good to see you this morning. Trading Research, always a pleasure. Kevin, Art W, the chef is in the room. Mike Magallanes. And Level 2 is with us this morning. Good to see you, Level 2. Angelina, Emma, Andre, James, good morning to you. So without further ado, why don't we go ahead and jump into the charts, as always, starting with the daily and crude, just going from left to right. Let's have a look. Good morning. Hey, Bulldozer. Haven't seen you for a while. It's good to see you. Emma, good to see you. And all right, here we go. All right, so here's that daily in crude. You can just see for yourselves, and I'm sure many of you that are trading crude are recognizing the same thing. We do have to remember that rollover is Sharon, good to see you. Caesar, Chris, first time here. It's glad to see you, and thanks for chiming in and saying hello. Let us know what you think. So again, we have to remember it is in rollover, and that's going to kind of keep the more range-bound trade likely. It's a higher probability as our longer, stronger traders to move these positions from the May contract to future positions. They're going to be working on getting a cheap rollover more than being concerned about becoming directional. They will become directional if pushed, but I don't see that that's going to happen. Had a pretty good look at weekly kickoff low, which was pretty swiftly rejected. It was a nice little move down there. It got a little deep into the weekly kickoff zone, but if you were recognizing that it did not accept, maybe you've got a good move to the upside off that kickoff level. Again, 58.25 was weekly kickoff level yesterday. We're going to see that on the 30-minute chart here shortly. Weekly kickoff low remains supportive. The market is still in balance, and we're calling this balance kind of short time frame controlled. We're going to be looking for short time levels to be respected unless something changes. Volume and open interest higher, maybe a little bit of a change in the wind, but remembering it is rollover, it's a little bit less probable for that to happen. Taking a look at the 30-minute chart. All right, so overnight's settlement is up here, so 59.77 if you want to put that on your charts. Here's that move down to weekly kickoff low yesterday. Just a straight move down to it. No real true acceptance below it. Not one 30-minute bar closed down below it. Once we put in this low, came back above weekly kickoff high, the race was on to the upside. I mean, we talk about when the market opens in range and in value, how sometimes the best trade location is going to come later on in the session. I don't think I could find a better example of that than crude oil yesterday. The open was up here, but the best trade location for the day, in my opinion, was down here because we did take out that high of the session, or at least right back up to it. So kind of gives you an idea of what we're looking at today. I mean, we're in range and in value. This is a longer-term level that paid pretty nicely yesterday, but we're going to be looking for short time frame levels to be respected. We've got the market kind of opening above value and coming back into value, so that's going to make our overnight low in the point of control here down at 59 bucks. A potential opportunity, but if that doesn't hold, we may see another opportunity for us to take another look down to weekly kickoff low, which is the value low from yesterday. So I'm going to be patient today. There's no gap. There's no imbalance. The market kind of opening in range and now back in the value area. Again, another situation where I'm going to be patient and wait for a good trade location as the day goes on. All right. It's somewhat off the radar this morning unless we get another good look at that weekly kickoff high here. All right, now where is my... All right, there it is. Take a look at the E-mini S&Ps. The E-mini S&Ps just loves to put in new highs in overnight sessions, and then the market always just seems to not want to leave that as the case. It always wants to come up and retest and take out those levels in regular trading hour session. New all-time high in the overnight. We had a 19,000 contract increase in open interest yesterday. We've been seeing for 2 days in possible information that we're seeing some longer time frame buyers continuing to add to positions up here. Is it going to pay for them? Well, only time is going to tell, but I don't want to step in front of them. Is there a hint in the wind here that momentum to the upside may be kind of starting to fall off on this daily chart? Well, we've got our whole moving averages above price and perhaps even ready to cross over tomorrow if we can't push this market higher. So, it's getting really hard to buy and it's equally difficult to sell because for the last 40 years the S&Ps have been eating shorts all the way up. So it's, I know on everybody's mind, every trader, every investor is wondering when and where will a pullback come. Oh, where, oh, where. Shorts continue to be getting ground to a pulp. As soon as we're all into the upside, that's when the market is going to turn. My dear old dad used to say the market always looks the best at the top and the worst at the bottom. And he couldn't be more right. As soon as everybody is invested to the upside, there'll be nobody left to buy. And that's when our pullback is going to come, whenever that is. We got the 4,100 just above, big fat round number. We've got weekly kickoff at 4,110, which is mostly a measured move. So we're kind of coming up to an area where we may find some resistance. The whole moving average is right at the big fat round number, 4,000. And then if we get above that, I mean, this is more of a zone than anything else. It's kind of a 10-point zone. And we're going to take a look now at the 30-minute chart. So we're seeing what we might be looking at here early in the session. Settlement right here, 40.70 even. Overnight longs. Do we have some overnight longs here? We've probably reconciled some of them. This consolidation here may be reconciling some more of them. So we're going to be opening with a gap. Well, the gap rules state if we can't close the gap relatively early, we look for opportunities in the direction of the gap, which would have us look for longs. So the opening range also might be an interesting opportunity for us this morning as we are opening out of balance. We've never had an open this high. The market is opening out of balance. So watch that opening range trade. It may be useful for us in the session today. Time will tell. The opening range is that first minute of trade from 8:30 to 8:31. If it's left at one extreme or another, it can be indicative of buyer or seller control early in the session. The fact that we're opening out of range and value says there may be a good opportunity early in the session today, but it's if it doesn't work, it's going to probably be one of the cheaper opportunities in the day today. I'm going to suggest really staying on your toes today in the S&Ps and in the NASDAQ. NASDAQ finally finding some room to the upside here after another 2-day balance, just similar to the S&Ps, similar but different. Open interest yesterday indicates there's short covering still going on. We lost open interest on this acceptance above this weekly kickoff high level. So it still seems like we're just kind of eating shorts all the way up here. We lost open interest on a day that was accepted higher. All-time high is not that far away. I mean, this is doable today if we find new business, if we continue to see buyers coming into this market. Yes, look left at level 2, absolutely. And trade what you see. There's no guarantee in anything that we do in these markets. The outcome is always unknown. So manage your risk and look for the right asymmetric opportunities. So opening range, well, let's look at the 30-minute here in the NASDAQ. Okay, so here's settlement down here. Put this on your charts, 13,604.75. The overnight low never even got down to settlement, so we're probably holding some more substantial overnight short time frame longs here. What are those short time frame longs looking for? They're looking for buyers, new business, new buyers to come in during the regular trading hours session. If they don't see that, we may see a push back down towards a gap close, perhaps even back down to the overnight low, but that's going to offer us opportunities to look for longs in cheaper trade locations. Again, watch the opening range. That first minute of trade may offer a pretty decent opportunity this morning if it is left at one extreme of the range or another. If it's left at the low of the range, that may be indicating to us and our overnight longs that buyers may still be in control in this market and they may get their push to the upside that they're looking for. Leaving the opening range at the high of the session might be just enough to cause enough of them to bail out and give us an opportunity to buy weakness. That's really what we're thinking about doing. Is we don't want to buy the high. We want to look for a pullback to buy. And and everybody, as I know, very concerned about some sort of major pullback coming. We've come a long way in a short period of time. Like I said, is once we're all into the upside, that's when the top is going to be in. Markets always look the best at the top and the worst at the bottom. Let's take a look now into the gold. Gold, Murph, we were talking about this yesterday in group coaching. The market really kind of finding a little bit of comfort near this weekly kickoff level early. It's a wonderful opportunity today, however, to have a chance to see an opportunity where we can limit our risk near this weekly kickoff high of 1750. Our W bottom may prove itself to be a bottom today. This could be a market state break from downside to congestion to a new upside leg possible. Longer time frame market state break is possible. Weekly kickoff going to be magnetic today. Let's take a look at what it looks like here on the 30-minute chart. So we do have some longs in this market from overnight. We've opened with a gap. We've been unable to close the gap. We're now holding above 1750. If we start to build some volume, momentum, and participation to the upside here, a pullback to the weekly kickoff zone at 1750 might be a decent opportunity for us. Again, opening with a gap, even if we had some overnight longs here, those overnight longs have found what they were looking for and what they were waiting for and what they were hoping for was buyers coming into this market. This is new business to the upside. Settlement is all the way down here, 1740-160, if you want to put that on your charts. And we're starting to see this, a little bit of momentum. We're seeing price action in our direction here. If we are holding longs above this level, and again, Murph, this is one of those situations, long above, short below. But if we become magnetic and we kind of dance along this line, it can definitely chew us up. So be careful with that. Again, a move back towards this level might be an opportunity to look for a long. At the very least, one of the things we always say is it's all about risk management, and this weekly kickoff zone offers that opportunity. And to the euro, dollar off a little bit this morning, so we're seeing some potential continuation above this weekly kickoff level. I don't think we're necessarily at a market state break from downside to upside yet, but if the dollar continues to soften and we see the euro continuing to creep higher, we may be in a situation where that may happen. We've got acceptance above that weekly kickoff high. For now, the dollar remains soft. Open interest increase yesterday on decent volume. We added 3,400, so that's saying that the volume is increasing at higher prices. Money's coming into the market at higher prices. We're still seeing buyers present in this market. 30-minute chart. All right. So settlement down here, no real overnight inventory. The market really just kind of falling back into value from yesterday. This is, going to suggest again that we stay patient here. If we get a pullback and we can't re-accept below value from yesterday, it could give us an opportunity. And again, our job is always to be limiting risk. Our overnight low settlement and low from yesterday looks like a pretty target-rich environment in either direction because, again, it offers the safety of tight risk management. No gap or overnight inventory, suggesting patience. Let a trade come to you today if you're going to be trading the euro. If you go looking for trades in the middle of value, it's kind of anybody's guess as to what might happen. And to the 10-year, everybody's focused on these interest rates these days, as we should be. rates so far are remaining stable for the last couple of days. I mean, we've basically got an inside day. We've got a double top day over day here, but the market really kind of falling into a range bound area, short time frame controlled area. Drop in open interest yesterday, minus 44,000, indicates, even still, probably more short time frame control. Some of the interest, some of the investors have kind of abandoned at least the futures in this for the time being until there's some sort of change that comes in. Pretty decent volume for this week, but overall pretty weak volume in this move, and losing open interest doesn't bode well for continuation to the upside. I'm going to be looking for opportunities to perhaps find ways to sell strength here in the 10-year and in the other treasuries. Here's where we're at this morning. No real overnight inventory. We're still in range and in value from yesterday. So again, that's going to suggest trying to stay patient. My initial focus in the 10-year today is really our overnight high, which is exactly the same high as the regular trading hour session from yesterday, and our overnight low. Just being stuck in the range from yesterday seems to be a real and probable hypothesis for us right now. And if that's the case, if we're going to be kind of range bound to yesterday's range, opportunities for shorts are up here, opportunities for longs are down here. And again, both sides, the overnight high and low, offer a pretty decent opportunity to limit risk. And that's really, again, what our job is. So we're going to be looking for those opportunities to find trade locations that are cheap. I like to call them cheap trades because I don't like to pay a lot when I'm wrong. And we're going to be looking for those today. Hopefully this has been helpful for you. Got a couple of comments here. Just going to go back and see what we've got going. Chris, again, glad you're here. I hope you found it useful. David, been trading 5 years and feel like nothing's changed from the start. From the start, not profitable. Oh, well, this is a very difficult thing to do, David, and we all know that. And it's really just a matter of making internal changes and mental changes. I think when somebody comes into trading, they're already wired the wrong way. Nobody likes to take losses, so we tend to fall into avoidance, or maybe I'll just wait and see if the market comes back. And it doesn't take too long until we figure out that that's really not a good idea. So we tighten up our risk, and maybe we get a little bit too tight. So we end up dying by 1,000 cuts. And the other side of that coin is after you've had a couple of losses, boy, that first win sure feels good, even if it's only a few ticks. But when we're losing, 20 ticks and we make 5 ticks, it just makes things feel better, but doesn't really keep the math on our side. So it's a kind of a rewiring. Professional traders are always looking to limit risk. They always are, first to get out when the market proves them wrong, in as much as you can be sure that the market is proving them wrong. But when they get something going that's good, they're good at recognizing the bigger opportunities. Everybody says, cut your losses, let your winners run. If it was that simple, we'd all be doing it. But it is a worthwhile effort, David. You are at Top Step, and you're not hopefully risking your own risk capital. That's why we're here. And getting into the trading combine gives you that feel of skin in the game without the big risk. And once you're funded, the big risk is ours. You don't have to worry about that. So, all right. I've got about 5 minutes here. Difficult this past 10 days to be consistent in longs for a point or two in the ES because profit-taking noise is fast and furious and crushes small trades easily. Difficult to catch a sudden flush as well. It's always difficult trading research. My suggestion is if you are in too short a time frame, the noise is going to bother you more than if you're kind of working in a little bit longer time frame. And I understand those are your strategies. But all that noise is the algos and the HFTs, and they do come looking for us. But if you expand your time frame just a little bit, you may find that you're going to be able to perhaps stay in some of those positions for a little bit longer. You may have to have bigger risk, but if you're always looking for those opportunities near the edges or near important inflection levels or near daytime short time frame inflection levels, if you've assumed that the market is kind of in short time frame control, we're not seeing a lot of big trading and big orders, and it's kind of hard to detect when the longer time frame is in the marketplace. But you don't want to fight them. It is always a challenge. Trading research, I'm afraid I don't have a recording from yesterday's group session and we're working on finding a way to distribute that to those who were there. I'm working on it. Trading research. Sorry about that. Ralph, what indicators are on your charts besides Hull? VWAP? Well, I have VWAP on my trading computer. That's a different platform, and I don't even really look at VWAP. I kind of watch the second standard deviation of VWAP. Former Vice President Joe Biden, thanks for keeping the information clear and quick. I just woke up, but I'll need a nap soon. You're welcome, Vice President and current President Joe Biden. Dan D, thank you, Dan. Appreciate that. Thanks for the comment. Smash the like button. I'm going to let everybody get down to work. Yes, Coach Lacey speaks. Yeah, she's. There's probably somebody walking a dog or walking along the side fence at our house. So she likes to let them know that she's the boss, and she doesn't like when I'm not talking to her. So let's take our deep breath. Stay humble, grateful, and creative. And in process today, let's finish the week strong, like Murph said. And blessings to us all. Have a great trading day. Be back. Dan will be back for the market recap today at 3:00. Looking forward to seeing you all back tomorrow. Tomorrow is going to be Friday. Yeah, I used to do that in the market forecasting. You called it the Friday dance, but haven't done that in a while. Get out there and profit. Trade well today. We'll see you later.